Hey tech enthusiasts, welcome back to the channel. Today, we're diving headfirst into the wild world of AI and its impact on the financial landscape. Are you ready for a roller coaster ride? Buckle up, because we're starting with a company you probably use every day, Stripe. Stripe, the online payments giant, is back in the big leagues. After a dip in valuation, they've bounced back to a staggering $90 billion plus valuation. Yes, you heard that right. $90 billion. This resurgence is largely fueled by the surge in demand for AI-related services. Businesses are scrambling to integrate AI into their operations, and Stripe is perfectly positioned to capitalize on this trend. But here's the million-dollar question. Is this sustainable, or are we looking at another tech bubble waiting to burst? We'll get to that in a minute. But first, let's understand the factors driving this AI frenzy. Stripe's comeback story is a testament to the transformative power of AI. The demand for AI-driven solutions is creating a ripple effect across various industries, impacting everything from payment processing to data center investments. This is not just a trend, it's a fundamental shift in how businesses operate, and Stripe is at the forefront, riding this wave of innovation. Now, let's switch gears and talk about another tech titan, Microsoft. Microsoft is making headlines not just for its AI advancements, but also for its commitment to environmental sustainability. They've secured a deal to restore the Amazon rainforest and offset AI emissions. This is a significant move, as AI development is notoriously energy-intensive. Training large language models requires massive computing power, which translates to a substantial carbon footprint. Microsoft's initiative sets a precedent for other tech companies to prioritize environmental responsibility in the age of AI. But is it enough? Can we truly offset the environmental impact of AI, or is this just greenwashing? It's a complex issue with no easy answers. Microsoft is tackling the environmental consequences of AI head-on, demonstrating that innovation and sustainability can coexist. This initiative not only mitigates the environmental impact of AI, but also enhances Microsoft's brand image and attracts environmentally conscious investors. Next up, let's talk about the unsung heroes of the AI revolution, data centers. Investors are flocking to data centers to capitalize on the AI boom. Data centers are the backbone of AI, providing the infrastructure needed to store and process vast amounts of data. As AI applications become more sophisticated, the demand for data centers is only going to increase. This presents a lucrative opportunity for investors who are willing to bet on the long-term growth of AI. But here's the catch. Building and maintaining data centers is incredibly expensive. It requires significant capital investment and technical expertise. And with increasing competition, the margins are getting thinner. So, is investing in data centers a surefire way to make money, or is it a risky gamble? The AI boom is fueling a massive surge in demand for data centers, making them a hot commodity for investors. This trend is expected to continue as AI becomes further integrated into various industries, creating a stable and growing market for data center infrastructure. Now, let's delve into the philosophical side of things. The return of the techno-libertarians is upon us. These are the individuals who believe in minimal government intervention and maximum individual freedom, especially in the realm of technology. They see AI as a tool for empowerment and innovation, free from regulatory constraints. But their vision is not without its critics. Some argue that unchecked technological advancement can lead to social inequality and ethical dilemmas. The debate between techno-libertarianism and regulatory oversight is a crucial one that will shape the future of AI. How do we balance innovation with responsibility? It's a question that policymakers, technologists, and ethicists are grappling with around the world. The resurgence of techno-libertarianism highlights the ongoing debate about the role of government in regulating technology. This perspective emphasizes individual freedom and innovation, but it also raises concerns about potential risks and ethical implications. Let's talk about a giant facing some serious challenges: Intel. The headline says it all. One way or another, Intel is for sale. This is a bold statement, but it reflects the current state of the semiconductor industry. Intel, once the undisputed leader, is now struggling to keep up with its competitors. They've faced setbacks in chip development and manufacturing, and their market share is shrinking. The rise of AI is exacerbating these challenges, as companies are increasingly relying on specialized AI chips designed by companies like NVIDIA and AMD. Intel needs to adapt quickly or risk becoming irrelevant. But what does the future hold for Intel? Will they be acquired by a larger company, or will they find a way to reinvent themselves? It's a critical moment for this iconic American company. Intel's struggles underscore the competitive landscape of the semiconductor industry and the challenges of adapting to the rapidly evolving demands of AI technology. The company's future hinges on its ability to innovate and regain its market leadership. Speaking of valuations, let's talk about Scale AI. This AI data labeling startup has seen its valuation double to a whopping $14 billion. Yes, you heard that right. $14 billion for a company that labels data. This is a testament to the importance of data in the AI ecosystem. AI models are only as good as the data they're trained on, and Scale AI provides the high-quality data that these models need to thrive. But is this valuation justified? Some argue that it's overinflated, driven by the hype surrounding AI. Others believe that Scale AI is a critical player in the AI value chain and deserves its high valuation. It's a debate that highlights the speculative nature of the AI market. Scale AI's soaring valuation underscores the critical role of data labeling in the AI ecosystem and the growing demand for high-quality training data. This trend is expected to continue as AI models become more sophisticated and require larger datasets. And the AI gold rush continues. Australia has minted its latest billionaire after a $16 billion Blackstone deal involving an AI data company. This is just one example of how AI is creating wealth and opportunity around the world. But it also raises concerns about inequality. Are the benefits of AI being shared equitably, or are they concentrated in the hands of a few? It's a question that we need to address as AI becomes more pervasive. The emergence of an Australian AI billionaire highlights the global impact of the AI revolution and the wealth-generating potential of AI-driven businesses. This trend also raises important questions about the distribution of wealth and the need for inclusive growth. Now let's talk about the legal side of things. U.S. patent laws need updating for today's budding industries, especially AI. The current patent system is designed for traditional inventions, not for the complex algorithms and data-driven innovations that characterize AI. This is creating uncertainty and hindering innovation. Companies are struggling to protect their AI inventions, and the legal landscape is constantly evolving. Congress needs to step in and modernize the patent system to reflect the realities of the AI age. The outdated U.S. patent laws are creating uncertainty and hindering innovation in the AI sector. Modernizing the patent system is crucial for protecting AI inventions and fostering further technological advancements. Here's a concerning trend. Thiel, Bezos, and Zuckerberg join the parade of insiders selling tech stocks. This is a red flag for some investors, as it suggests that these tech titans may believe that their company's stock prices are overvalued. But it could also be due to personal financial reasons or diversification strategies. Whatever the reason, it's a trend that's worth watching closely. Are we seeing the beginning of a tech stock correction? It's too early to say for sure, but it's a reminder that even the most successful companies are not immune to market volatility. The insider selling of tech stocks by prominent figures raises concerns about potential market corrections and the overall health of the tech sector. This trend warrants close monitoring and careful consideration of investment strategies. Let's shift our focus to a company you might not have heard of yet, DeepSeek. DeepSeek is making a deep impact in the AI world. They're developing cutting-edge AI models that are challenging the dominance of companies like OpenAI and Google. Their innovations are pushing the boundaries of what's possible with AI. But DeepSeek's success also highlights the importance of data and resources. Developing state-of-the-art AI models requires massive amounts of data and significant computing power. This creates a barrier to entry for smaller companies and reinforces the dominance of the tech giants. DeepSeek's emergence as a significant player in the AI landscape demonstrates the potential for innovation and competition in the sector, but also highlights the challenges faced by smaller companies in competing with tech giants. This is mind-blowing. A pre-product AI company is now valued at $30 billion. $30 billion for a company that doesn't even have a product yet. This is a prime example of the hype surrounding AI. Investors are throwing money at anything that has the letters AI in it, regardless of its actual value. This is reminiscent of the dot-com bubble of the late 1990s. Are we heading for another crash? It's a risk that we need to be aware of. The exorbitant valuation of a pre-product AI company underscores the speculative nature of the AI market and the potential for a bubble. Investors need to exercise caution and conduct thorough due diligence before investing in AI-related ventures. Now, let's talk about a critical weakness: Europe's dependence on U.S. tech. Europe is lagging behind the U.S. and China in the AI race. They're heavily reliant on U.S. tech companies for their AI infrastructure and expertise. This creates a strategic vulnerability, as Europe is at the mercy of U.S. policies and regulations. Europe needs to invest more in its own AI capabilities to reduce its dependence on foreign technology. This is crucial for its economic competitiveness and national security. Europe's dependence on U.S. tech highlights the strategic importance of AI and the need for greater investment in domestic capabilities. This is crucial for ensuring Europe's economic competitiveness and strategic autonomy. Let's highlight a positive surprise. Japan's chip supplier sector is making a comeback. After years of decline, Japanese chip suppliers are regaining their competitiveness. They're investing in new technologies and focusing on niche markets. This is good news for the global chip supply chain, as it reduces reliance on a few dominant players. Japan's resurgence in the chip supplier sector demonstrates the potential for innovation and diversification in the global semiconductor industry. This trend is expected to contribute to a more resilient and competitive chip supply chain. Here's a worrying trend. UK companies plan to invest in AI instead of hiring staff as costs rise. This is a sign that AI is starting to displace human workers. Companies are seeing AI as a way to reduce costs and improve efficiency, but this could lead to job losses and increased inequality. We need to find ways to mitigate the negative impacts of AI on the workforce. This includes investing in retraining programs and creating new jobs in the AI economy. The increasing investment in AI by UK companies at the expense of hiring staff highlights the potential for AI to displace human workers and exacerbate income inequality. This trend underscores the need for proactive policies to mitigate the negative impacts of AI on the workforce. Finally, let's talk about ethics. Employees can help to make big tech ethical. Tech companies need to prioritize ethics in their AI development. This includes ensuring that AI systems are fair, transparent, and accountable. Employees can play a crucial role in holding their companies accountable and advocating for ethical AI practices. By speaking out and demanding change, they can help to shape the future of AI. The role of employees in promoting ethical AI practices within big tech companies is crucial for ensuring that AI systems are developed and deployed responsibly. This underscores the importance of corporate social responsibility and the need for a strong ethical framework in the AI sector. All right, let's circle back to Stripe. Their comeback is more than just luck. It's a strategic pivot towards AI-powered solutions. They're leveraging AI to improve fraud detection, automate customer support, and personalize payment experiences. This is resonating with businesses that are looking for ways to streamline their operations and enhance customer satisfaction. But here's the deeper analysis. Stripe's success is also a reflection of the broader trend of API-first companies. These are companies that build their entire business around APIs, application programming interfaces, making it easy for other companies to integrate their services. This allows them to scale quickly and reach a wider audience. Stripe's API-first approach has made it a favorite among developers and businesses alike. And as AI becomes more integrated into the business world, Stripe is well-positioned to continue its growth trajectory. Stripe's resurgence is driven by its strategic adoption of AI-powered solutions and its innovative API-first approach. This has enabled the company to capitalize on the growing demand for AI-driven business solutions and solidify its position as a leader in the online payments industry. We can see the impact of this strategy in the increased adoption of Stripe's services by businesses of all sizes, leading to a substantial increase in transaction volume and revenue. A key factor in Stripe's success is its focus on developer experience, making it easy for businesses to integrate Stripe's payment processing capabilities into their own applications. This has fostered a loyal developer community and contributed to the company's rapid growth. Now, let's talk about the technical aspects. Stripe uses a variety of AI techniques to enhance its services, including machine learning, natural language processing, and computer vision. For example, they use machine learning to detect fraudulent transactions in real time, preventing billions of dollars in losses for their customers. They also use natural language processing to understand customer inquiries and provide personalized support. And they use computer vision to verify the identity of users and prevent account takeovers. These AI-powered capabilities are constantly evolving, thanks to the ongoing research and development efforts of Stripe's engineering team. Stripe's success can be attributed to its early adoption of AI and its commitment to continuous innovation. Their AI-powered solutions are not only improving the efficiency and security of their services, but also enhancing the overall customer experience. This has allowed them to differentiate themselves from their competitors and establish a strong brand reputation. The technical foundation of Stripe's AI capabilities is built on a robust data infrastructure and a team of talented data scientists and engineers. They leverage cutting-edge AI frameworks and tools, such as TensorFlow and PyTorch, to develop and deploy their AI models. They also invest heavily in data security and privacy, ensuring that customer data is protected at all times. Stripe's commitment to technical excellence is a key differentiator that sets them apart from other payment processing companies. The use of techniques like federated learning allows them to train models on decentralized data sources, enhancing privacy and reducing the risk of data breaches. This approach aligns with the growing emphasis on data privacy and security in the AI industry. You can read more about this approach to decentralized learning in the paper, Federated Learning, Strategies for Improving Communication Efficiency by McMahon et al., 2017. All right, time for some controversy. Is the current AI investment frenzy justified, or are we heading for a bubble? This is a question that's being debated in boardrooms and on trading floors around the world. On one side, you have the optimists who believe that AI is the next industrial revolution and that the potential for growth is limitless. They point to the transformative impact of AI across various industries, from healthcare to finance to transportation. They argue that we're only scratching the surface of what's possible with AI and that the best is yet to come. On the other side, you have the skeptics who warn that the current valuations are unsustainable and that we're in a classic bubble. They point to the lack of profitability in many AI companies and the difficulty of translating AI research into real-world applications. They argue that the hype surrounding AI is obscuring the underlying risks and that a correction is inevitable. So who's right? The answer is probably somewhere in the middle. AI is undoubtedly a transformative technology with enormous potential, but it's also subject to the same market forces as any other industry. Valuations need to be grounded in reality, and companies need to demonstrate a clear path to profitability. The key is to separate the hype from the substance and to invest in companies that are building real value. The debate over AI investment highlights the tension between the transformative potential of AI and the risks of speculative investment. A balanced perspective is crucial for navigating the AI market and making informed investment decisions. Now, let's talk about how you can verify some of these opposing viewpoints. One way is to look at the actual revenue growth of AI companies. Are they growing at a rate that justifies their valuations? Another way is to look at the adoption rate of AI technologies. Are businesses actually using AI in a meaningful way, or are they just experimenting with it? You can also look at the number of AI patents being filed. Is there a lot of innovation happening, or is the industry stagnating? By analyzing these data points, you can get a better sense of whether the AI market is truly sustainable. Another way is to assess the talent pool. Are there enough skilled AI engineers and data scientists to meet the growing demand? A shortage of talent could slow down the growth of the AI industry and put a damper on valuations. Finally, and perhaps most importantly, look at the ethical considerations. Are AI companies addressing the ethical challenges associated with AI, such as bias, privacy, and security? A failure to address these issues could lead to regulatory backlash and damage the reputation of the AI industry. By considering all of these factors, you can make a more informed assessment of the AI market and avoid getting caught up in the hype. Remember, investing in AI is a long-term game, so it's important to do your research and make smart decisions. Verifying the opposing viewpoints requires a combination of quantitative and qualitative analysis. By examining financial data, adoption rates, patent filings, talent availability, and ethical considerations, you can gain a more balanced perspective on the AI market and make more informed investment decisions. This approach can help you avoid the pitfalls of speculative investment and identify companies that are building sustainable value. So what's the bottom line? The AI revolution is here to stay, but it's not without its challenges. We're seeing a surge in AI-related investments, but we also need to be mindful of the risks. The key is to approach AI with a balanced perspective, recognizing its transformative potential while also being aware of its limitations. We need to invest in ethical AI development, promote inclusive growth, and address the potential displacement of human workers. The future of AI depends on our ability to navigate these challenges and create a world where AI benefits everyone. Now, I want to hear from you. What are your thoughts on the AI revolution? Are you excited about the potential, or are you worried about the risks? Let me know in the comments below. And don't forget to like and subscribe for more insights into the world of AI. Thanks for watching, and I'll see you in the next video. Remember to stay informed, stay critical, and stay ethical. The future of AI is in our hands. The AI revolution presents both immense opportunities and significant challenges. By adopting a balanced perspective, investing in ethical development, promoting inclusive growth, and addressing potential workforce displacement, we can harness the power of AI to create a better future for all. Stay tuned for more updates and insights into the ever-evolving world of AI. Don't forget to subscribe and share your thoughts in the comments below. Your engagement is crucial for shaping the future of AI. Let's work together to ensure that AI benefits everyone. The ongoing evolution of AI will require continuous monitoring, adaptation, and collaboration. By staying informed and engaged, we can collectively shape the future of AI and ensure that it serves humanity's best interests. Your participation in this conversation is vital for fostering a more responsible and equitable AI ecosystem. Remember, the future of AI is not predetermined. It is being shaped by our choices and actions today.